What I'm here to talk about is about listener business and the boring, mundane, behind the sophisticated financing aspects of listing a company and trying to do business and raising finance in the agribusiness space. I think eventually the presentation might come up, but what I could do is walk you through that, the aspects of that and how we did what we did, and we could take questions about the detail and the boring parts and aspects of that business going forward. So when we talk about financing, so I think we've done most of this, and I tried to speak through most of this, an overview of the industry and the landscape, talking about Nigeria. As the head of NERSL said earlier, 82 million hectares of arable land, and less than half of it is under cultivation. But there's a significant amount of financing that's available to the sector, which is the agribusiness sector. So what we did was take a boring business and list it on the Nigerian Stock Exchange. What I tried to do is go through the corporate history, the strategic outlook, what we're trying to do to make a business attractive to financiers. So LLX was listed in 1980. It became an insolvent company that was listed on the Nigerian Stock Exchange. What we had was a significant piece of arable land in a state in Nigeria that we, through a process of a reverse acquisition onto the Nigerian Stock Exchange, listed and made ready for the capital markets. So when I say the capital markets, equities, debt, so it's fixed income, commercial papers, as you were speaking about, which is the direct opposite of equities on the Nigerian Stock Exchange. So what we're trying to do is prepare a company to try to experience the entire gamut of the capital markets, from fixed income to equities to alternative, being attractive to alternative investors, and also being able to list on FX or trade commodities. So in terms of building the proper business, I think for us there are 4 pillars of value creation that we had. One is competitive market positioning, diverse entrepreneurial leadership and technical partnerships, an integrated process, production and processing strategy, and robust ESG and CSR systems, robust partnership network. And why am I saying this? Outside the fact that you need to raise financing, when you raise financing, you have to, one, be attractive to financiers and build a company that makes them understand that you can actually add value and produce what they want. Because people invest in you for one reason, to make more money. Essentially, corporate social responsibility, structure, capacity, and adding value. Those are the 4 basic pillars in terms of how you want to build a company to make people understand that if they put money in you, they won't lose the money they put in you. So that's our 5-year outlook. And I think it's important to outline to people what your key investment thesis is. What kind of business are you trying to build? What kind of returns are you trying to make? And how do you make a business attractive to the capital markets? And I think I've tried to run through that pretty quickly, and I can go into detail on any questions that you want to ask about that. Thank you very much.
So Valency as such is based in Singapore. We are 15 years old company. We cater 38 markets. We have over 1,400 employees. Out of that, 1,000 plus is in Nigeria. We are basically into agro-commodity trading, processing, and distribution. So our business is basically, all our logistics supply is in-house. We are among the top 5 exporters in Nigeria, and we have very limited and selective participation in the industrial vertical, where we import agrochemical and pesticides. These are the products or segments where we are spread off. I will not take this so much. Right now, we are implementing SAP HANA across all our verticals in Nigeria and other countries. We were told earlier CP will take 4 to 6 weeks or maybe 8 weeks. And remember, it was a COVID time, somewhere around July, August last year. So that was a tough decision, whether to come out or not to come out. If CP fails, what happens? Whether market will accept or we are out of the market, or banks will pull out all their funding. So after all deliberation, everything, FBN came to our lead manager and they supported us very well. So they gave us the checklist. So based on the checklist, so we have done the grouping, like how the transaction will structure, what are the legal and accounting due diligence, what are the things to be done for rating, offer documents, and then what are the rules, regulatory, and overall, what is the financing cost, whether it's cheaper than bank or it is expensive than the bank, and if you are saving what is the quantum of saving. So everything was coming out positive. So we started to go for it. So this is a checklist, I can say. If you want to go for a CP, you should have up to date all your statutory and legal compliance, and any gap in your compliances will delay your CP. Like in our case, we were not having the PENCOM certificate, and because of COVID, the offices were not functional. So it delayed our CP by almost 2 weeks. And then what they look in your operation, your past performance, current performance, and your ability to meet future cash flows. Because CP is a short term, maybe 6 months, 9 months at the most. But like is a perpetual, we are given 20 billion approval from FMDQ, but we came out with 5.5 billion, say first issue, and now next month we are coming out with another CP. Not so much of, I can say, risk. There is a small risk, but not 100% risk. And common man will think there is no regulatory control on process or default. No, FMDQ is a body which controls and regulates everything. You have to file your accounts, your auditor has to give your comfort, and there are so many checklists where chances of default is minimum. And then as an issuer, I mentioned first is our own, whether it will be successful or not successful, internal battle. Then we always believe traditional funding by bank is a better way because it's in-house, nobody knows in the market what rates you are paying, whether you will be successful, failure, all your accounts, your performance is internal. But once you go to the market, it is on the website, FMDK website, the balance sheet performance of the past, future, our cash flow, our plans. So it's a very transparent.
So we already got the brief, helping African agri-businesses succeed. We don't believe in agriculture. We believe that there's business in agri. So Mr. Sabiola spoke about this earlier, about the 24% of Nigerian GDP was generated from the agricultural sector only in 2020. But further research shows that much of the investment went into the production line, which is farmers. At One Capital, we don't finance farmers. We are more concentrated on the processing line because we believe that when you add value to what we're selling, then you're better able to attract investors. We are better able to position these companies to become category kings in the market. Okay, so so far we have funded some agri companies. AgriCorp is into ginger production and processing. OCC is a technology-based warehousing company, while Cheerful Foods is into production of beans flour and plantain flour. The combination of these three companies are currently valued about $23 million. To our greatest surprise, AgriCorp made a whopping $206 million within 6 months of introducing a production line to AgriCorp. We also sealed international contracts and began to export these products to Dubai and South Africa. As at 2020, coming into 2020 and coming into a pandemic, we were afraid that we were going to lose all our investments. However, reverse was the case. In 2020 half year, by June 2020, AgriCorp had made revenues in excess of $660 million because other countries were having difficulties producing. Nigeria's own ginger was now in high demand. And not just ginger in its raw form. We were cutting it, drying it, splitting it. Our processing line was also converting some of it to the powder form. Currently, AgriCorp has a plan to be listed on the stock exchange by 2022. Our funding currently comes mostly from private equity. So it speaks to what Mrs. Abiola was saying, that we don't just have to wait for the capital market. In the meantime, we are making use of private equity to invest in these companies that we believe will be category kings tomorrow. Currently, AgriCorp is valued alone at over $13 million and is about to complete its Series A funding from the private equity market.
So if I ask you, what do you see? I'm sure every one of us, we have different things we see from this picture. Some will see sacks of grains. Some will see a man standing. There's another man maybe taking a nap after he had this job there. So what do you see? Do you see grains? Or do you see assets? So Valence mentioned going to raise CP from the capital market, and one of the key requirements for doing that is a solid cash flow. Depending on who you are and looking at this picture, right, you could either see grains or assets. If you are a processor, you will know that the biggest currency of processor are the commodities because that forms most of the time 80% of their production cost. So asking how do you then take this 80%, something that records about 80% on their balance sheet, convert it into an instrument that they can then take into the market and raise more working capital? So pretty much what we've done at AFEX is to use the concept of electronic warehouse receipts to convert physical commodities into financial instruments. And the argument for this is, number one, commodities are assets. Commodities have economic value. And because they have economic value, they can then be traded, or they can be taken to the market to get additional values on them. Warehouse receipts is also a formal instrument. If we look at the nature of agriculture in Nigeria, it's kind of informal. And one way to formalize and attach ownership to whoever owns commodity is through the warehouse receipts. And lastly is that because you've been able to convert from the physical commodity into a formal asset or into a formal instrument, then you can collateralize that. There's a common saying we use at AFEX that if you can securitize it, you can finance it. So I want to quickly go through a case study. We raised a 20 billion naira asset-backed commercial paper Q4 last year. That was the first ever asset-backed commercial paper issued by a commodities exchange in Nigeria. So how does this match with the commercial paper? Securitization, which is that is one of the biggest comfort to the investor, because there's an underlying asset to fall back to in the case of default. Commercial paper, you're just borrowing against the good faith of the organization, solid cash flow. Any business can fold up. But with the CP, you can fall back on the underlying asset and then sell. There's also the reduced credit squeeze. Again, it comes back to the fact that you've been able to securitize the underlying assets. In terms of structure, yes, the CP is a bit more structured because it's been around in this market longer than the ABCP. But again, with a number of issuance, we will get there on the side of the asset-backed commercial paper. In terms of risk diversification, all the risks that are inherent in the asset-backed commercial paper based on the structure, you don't have one risk. You have many risk points that you can mitigate before the entire program goes up. The way it's also structured, you cannot have risk of diversion of fund because there's a custodian that sits on the collateral and then manages how cash is being disbursed to the obligor.